we've been talking about the idea of whether the profit recession is over before we get into a broader economic recession. Do you think that the worst is still to come when it comes to company profits?
We do. There's a lot of uncertainty out there. The cost of labor is quite high, and then if the Federal Reserve is working, then the higher interest rates should reduce demand. So we have higher costs and reduction of demand for products and services, and we do think that's going to affect profits. And that's really what we're thinking next year right now is the biggest risk, because we kind of know where interest rates are going to go. I mean, we know there's going to be another 50 basis point next week and probably 50 or 25 basis point in February. And so we know the end is near as far as the interest rate. Next year, really, the risk is profits.
If you're being much more selective and I guess agile going into next year, that's been a theme that we've been discussing a lot. What sectors do you think would be able to benefit or at least survive better than others if we are expecting at least a shallow US recession?
Yeah, we like financials. We do think that the net interest income that they are going to be getting because of the higher interest rates, and the individual still has solid deposits, and there's still lots of good balance sheets for the individuals and the companies as well. So we think financials could continue to do well, and we like healthcare. Healthcare is a sector that does well in somewhat of a recessionary environment, which we're not saying we're going to have a big recession. We think we're going to have maybe what we call a little R, a little recession, and we could avoid it altogether. It just depends how far the Federal Reserve does. But we really like healthcare, and of course we like energy. We think with the fact that China is going to be opening up, there's going to be more demand for energy. Also the fact that the release of the reserves, of the oil reserves that U.S. has been doing, is going to come to a stop pretty soon here. And then, and obviously those companies have good dividends. And there's also the LNG part of energy, which we like.
Wouldn't higher energy prices, especially as you mentioned with China coming back, lead to more inflationary concerns and perhaps put at risk the Fed pivot next year?
It could if supply does not pick up. And of course, OPEC is actually cutting supplies, which is a worry, which is why we're still not all in as far as the economy and inflation coming down as fast as the federals, as far as the market thinks, which we think, though, that, inflation will come down because of a lot of other things coming down, housing and so forth. But it may not come down as fast as the Federal Reserve wants it to, because we do have a risk of the higher energy cost. And that will slow down the recovery, which is why we're cautious. And we're selective on the sectors, because you really need to be cautious right now until we see some clear direction of inflation. As you know, there's some big numbers on Friday, PPI and CPI next week, that will be indication of what to expect with inflation. But the higher energy prices could delay the recovery.
Going into next year, how do you factor in geopolitical tensions? Because we're now expecting perhaps more export restrictions, this time coming from the Netherlands against those shipments into China.
Yeah, there's a lot of that kind of risk. I mean, who would have thought beginning of last year we'd be talking about Russia and Ukraine, and now we have the Netherlands and other because we're, companies that depend on U.S. earnings and U.S. consumer are going to be much more likely to do better this next year.
Does that mean more domestically oriented and smaller caps as well, as opposed to larger caps, especially given the fluctuations in the dollar as well?
I think for the very first time, a small cap might start doing better than large cap because of what you just said, that not dependent so much on the dollar and all the currency risk. So I'm not abandoning large cap by any means, but it may favor a bit more into smaller cap. So because of the dollar, not having to worry about the dollar fluctuation.